Hello and welcome to Upside, where every week we dig behind the headlines affecting European venture. Today it is Mads, Lomax and myself. And what are we talking about? We've got, will Trump ban Chinese AI? Hugging Face hack, was it just PR? What will Burnham do next? We get into their shoes in the government. What to look out for in the week ahead. And predictions plus deals of the week. Gentlemen, lovely to see your faces. You are all in foreign lands. To me, Mads, what's the latest with you?
As you can see, I'm back in my glorious library here.
Back in the library.
Still in Denmark, still enjoying the Scandi cellar.
Lovely, lovely. Lomax, yes. What's cooking? You still on the beach?
All good. Still on the beach. We'll be here all summer, basically. As I said last week, just did our first deal out of Fund 2. Just finished an investor newsletter where I was updating our investors on a trip that Rod, my partner, did to Proto Town. Proto Town is this Mad Max style neo town in the desert in Texas, 1,300 acres for people building cool stuff, hardware. So it's a really cool. One of our portfolio companies is there. And I was actually reflecting that Europe needs a Proto Town. So, it's out in the desert. You've got people building automated bulldozers. You've got space companies. You've got drone companies. Everyone living there on site. It's a cool community.
I want to do some quick news before we look at markets and then dig into the main meat. But this week we saw oil cross $100. It's now dipped a little. And we also saw at time of pod, Trump has reignited his tariffs. He's circumvented the judging rejection on the grounds, and he's found a new way to get tariffs back into the public domain. So that's not good news for inflation. Also, will PayPal be acquired? Stripe and the private equity house Advent International have offered 50 bill or just over. I've always seen PayPal as a pretty horrible business, but I kind of also wonder what they're buying. Is it a stable coin play? I do know that if it did get through the regulators, they would own collectively about 30% of all global e-com payments. I don't know how that's going to go down. Polymarket has an 82% set this year that some kind of purchase acquisition will happen. Any thoughts on this before I move on to bits more? Any thoughts on? Is this interesting, Mads, Lomax?
Yeah, I think it looks smart. I mean, you've got a bit of an oligopoly with the payment service providers, right? Especially with the credit card companies. You've got Visa, you've got MasterCard, some extent Amex as a distant also run. And they're running a bit of a racket. And you've got Stripe today, which has got all the merchants. You got PayPal, which has got hundreds of millions of users. So could they potentially combine the two to create a challenger for Visa and MasterCard? I think that's an interesting tie-up, and that's probably what's behind the rumored acquisition here.
No, I think Matt's also right. Interestingly, PayPal is down from its peak in 21 at 360 billion market cap. It's down at a tenth of that now at 36 billion. The acquisition
it's just a horrible business. Have you ever used a PayPal service in the last
Not
3
for a long
years?
time. No, maybe in some countries it's used more than others now, but I don't know.
No, it is a horrible service to use, and obviously, there are strategic reasons for the purchase. But I want, and maybe Stripe can turn around the actual user experience, which
I don't know. I mean, they are buying a decaying brand, and what else could they do with the money? Although I know that a lot of this is going to be debt funded. Probably not good for ad yen, though. I would suggest, but let's see.
Yeah, no, fair. I also wonder what they'll do with PyUSD and Bridge and how that stablecoin piece will pan out. But we'll see if it gets through the regulation. Also saw this week a mini battery breakthrough. Dr. Hugh O'Connor, who's a researcher at Queen's in Belfast, he built a 3D printed flow battery cell costing roughly $74. After discovering the commercial equivalent for his PhD research would cost $2,000 to $3,000. Now, digging behind the scenes a bit, I got super excited when I saw this story. However, this large-scale iron-based industrial energy storage thing won't happen anytime soon. We're probably still a decade off, but it was a nice kind of research R&D step forwards.
Interesting. I was chatting to a startup this week in a different context that's also 3D printing an important piece of hardware for $2.80. In the current state of the art is $5 to $10 grand.
So maybe we'll see more of this. Yeah, interesting. I mean, all these tech innovations are going to converge and then create these wonderful breakthroughs, which is the whole point, right? And that's why we exist. Also saw in PitchBooks, I know we hate
you hate reports
and
but you love reports, so we should keep doing them. You'll keep doing them anyway.
I'm going to do them regardless, yeah. But I was looking at PitchBook's Q2 European startups and how they'd raised 44 bill in H1 26, so kind of keeping an eye on what the metrics and the numbers are saying. So this looking like a 27% year-on-year increase, which I thought was kind of cool. However, looking at the barbell, which is natural in our industry, I was wondering if we have a problem. It looks like the 2026 vintage is taking half the shots with twice the capital or more. Sure, it's not as extreme as the US, but is this going to be problematic? I don't know if either of you have any thoughts on this capital concentration barbell issue.
I mean, look at the US venture ecosystem now, and look at OpenAI and Anthropic. Like, there's huge concentration on a very small number of companies. In some ways, it's great. The companies that show the traction are actually demonstrating ability to attract significant amounts of capital. In the other side of the coin, it's effectively lemmings running off the cliff, or everyone heading towards or sheep. It's the sheep strategy where everyone just follows blindly each other.
Talking about concentrated capital, Atoms, the Travis Kalanick startup, has raised another 1.7 billion. Just a cool 1.7 billion kids from A16. Uber is also investing just to create some wonderful circularity, reconnecting Travis to the mothership. Lomax, you got any thoughts on Atoms?
I mean, maybe just a reminder what's been happening with Travis Kalanick, because he has been, no pun intended or pun intended, cooking stuff away since his Uber days. So this Atoms company is essentially a rebranded holding company created atop of the project he's been working on since Uber, which is Ghost Kitchen Play Cloud Kitchens.
But it's much bigger than that, isn't it?
It is indeed, yeah. So he changed the name in March earlier this year. He announced he'd acquired Pronto, which is the heavy industry automation company run by Anthony Lewandowski. Remember him from the Uber days. And it's a bit vague exactly what they're going to work on. I mean, that he uses terms such as a wheelbase for robots. Here's a quote, on many levels, this round is a bit of unfinished business, fuel to complete the bits to Atoms story arc. We started at Uber, continued at Cloud Kitchens, and will now finish at Atoms. 16 years ago, I started a journey to digitize the physical world, understand, predict, and control the physical world with software, building atoms-based computers where CPU is manufacturing, storage is real estate, and network is transportation. I mean, there's something in there, but that's that.
I'm not quite sure what it is, but it was a lovely soundbite. Thanks, Travis.
Yeah, they're going to be going. It's effectively, a play in physical AI. Mining is involved as well. We will see where they go, but clearly, do not write this dude off.
No. I mean, also with that amount of capital, absolutely.
And it's also A16Z have a habit of backing like controversial founders going again. They obviously backed Adam Newman a couple of years ago. Obviously, Travis Kalanick nowhere near as controversial, I'd say, as Adam Newman, and he actually made a lot of people a lot of money and built a company that is, by all accounts, performing well. So let's see.
Mads, anything else caught your eye this week, or any updates on last week's thoughts?
Yes, I mean, some of the things we spoke about last week was that we've had the Farnborough Air Show this week. It's kind of one of the largest expos for jets and other military stuff. And order books closed just around $85 billion, about 350 aircraft ordered. A little bit short of the 2024 record of 105. So although we've been talking a lot about rearmament and more defense spending, the numbers were actually down a little bit on 2 years ago. Yeah, just take note. Not sure if it's a trend or just a blip, but interesting to see. Burnham is in number 10 as expected. Healey in number 11. We're going to talk about what that means.
But Burnham isn't in number 10 today. He's in the northern number 10 office today, 24th of July, as we speak, which I thought was an interesting news article.
I don't know. I feel like we should just ignore that and it's just stay at SAP, but who knows? The gilt markets, on the other hand, are not ignoring what's happening. The UK is now the worst performing on interest rates of any major economy, and it's not looking good. And we're going to unpack that, I think, in your Burnham segment later on. We've had earnings coming out from Alphabet and Tesla. They were not great. Well, Alphabet's earnings were actually great. They were doing super well, but the stock's still down. We're going to talk more about what that has been caused by. And also we spoke about SAP coming out on the enterprise software side. I said last week, I think they'll do all right. They did all right. Bookings were good, but the stock was still largely flat. There's a continual erosion of their legacy business, which is the license business. The cloud business is growing. The orders are looking good. The backlog is looking good. Hasn't shown up in earnings yet. And AI is still a cost line item for SAP. So they're still spending to try and buy their way into the AI space and not really something we can see in hard earnings numbers yet. So that's sort of the quick update from earnings land.
Well, let's move into more of the market stuff. I'm also assuming with IBM, SAP, there's so much oxygen being drawn elsewhere, and they're still so trad. I think it's going to be a hard march for them. But let's look at Alphabet and Tesla. They crushed targets, as you just mentioned. Alphabet grew cloud 82%, still got sold. This is the first cash burn in 22 years. So this is the first time they're now everyone else, they're moving into spending debt, which is obviously why they're being punished. And the capex is nuts. So we'll have to grab the popcorn for that one. Tesla set a revenue and delivery record. I wasn't quite sure how, but we're going to talk about that in a sec. Both up around 25%, yet it had its worst day in a year because the record car deliveries were bought with discounts, was the headline in the FT, which I think is mostly fair, but certainly isn't the whole story. Just to set the scene, Tesla's operating margin fell from just over 4% to 1.4%, and its share price dropped 16%, sending them back 12 months. The why, the EV credit subsidy is being gutted under Trump, and that's pure margin for Tesla. And regarding the revenues and deliveries of the cars, not only was there some discounting, as I kind of figured but wanted to look into, but there were also some cheaper models with less margin. There's a leasing skew in the numbers, and operating expenses were up nearly 50%. As we are all experiencing, obviously inflation is everywhere. Incidentally, and Mads, maybe you can, I don't know where this lives on the balance sheet, but Tesla owns shares in SpaceX, around 2 billion, I think, at current market value. Is that income? How does that get recognized?
Yeah, they probably recognize that as extraordinary income.
Okay. I didn't know if that was going to kind of also skew any of the numbers, but I thought that was quite an interesting one, and to see how that gets used in future reports. I don't know. Lomax, anything else?
Your question is how many future reports there will be, right? I mean, then the speculation is still that the two companies will merge soon.
Oh, fair. Yeah, of course.
I think obviously Tesla, the car stuff. I mean, I know the robotaxi story actually has got a long way to run. And actually, I was reading that robotaxi has now had over 380,000 miles without a notable incident and is scaling, listen to this, guys, at more than 10% a week in terms of miles driven across 7 US markets. Like, I guess it's not surprising, but just imagine that thing has got a long way to run. And then probably more pertinently, which probably hit Tesla a bit in terms of the investment decision making they're making, but clearly they're going big on Optimus, the robot program. So I think, that's where a lot of the investment's coming from, and the capex, and maybe the markets don't like that so much. But it's interesting listening to Musk in the earnings call saying the Optimus is the hardest product to scale manufacturing that they've ever made at Tesla, because everything on the robot is new. I mean, not surprising, or not unsurprising, or not surprising. And he did sort of caution. He said, look, that the ramp will follow the normal S curve, but the initial portion of the S curve will be quite flat and quite long. This is the S curve of technology maturity. And so if you have the thesis of never write off Elon Musk or back in whatever he does, he's cooking up something pretty potent at Optimus, within Tesla. So
did you see his interview with Zanny Minton-Beddoes from The Economist?
Missed it.
Did you watch that?
No.
I think it was last night. It might have been yesterday, as in the 23rd of July, that is. It's interesting. I mean, I'm not a massive fan of the human, but I'm massively in awe of the entrepreneur, and it's really interesting to see. And she didn't pull any punches, to be fair. She didn't let him off the hook, and they were talking about his far right opinions and building businesses, and he was adamant how he's always right. It was an interesting interview. If you get a chance, give it a watch. The backdrop here is moving out of free cash flow into spending and debt. So where would you take this one?
Yeah, I mean, let's talk about that. Just to comment on Tesla and Optimus. I mean, I think we'll all look at this and say, yes, of course, there's going to be humanoid robots. At some point in the future, there will be robots that will be humanoid that will do stuff. It makes sense. I think what's unclear to me is whether this wave of humanoids is going to be like the Apple Newton, something that's, yes, eventually it will happen and we will all have small kind of PDAs or iPhones in our hands, but the Newton was just a bit early and they hadn't quite figured it out. And then Jobs came back with the iPhone a decade later and suddenly it all came together. And I'm still not 100% sure that this is not a Newton moment more than an iPhone moment.
I'm totally with you. I mean, I see all of the latest videos of these incredible humanoids doing incredible things, but you still wouldn't want one in your house. And you certainly wouldn't want one looking after Granny and falling over and crushing her. It's not going to end well, I don't think. I don't think we have the dexterity. I don't think we have the control mechanism. It just feels a little bit. And I'm not even convinced we'd have humanoids in the house.
Gentlemen,
would you have one?
You should take on, when it comes to consumer robotics, you should take a leaf out of the Outsized Ventures playbook. I'm talking my own book here, but one of the companies we backed in the last few months is working on robots for the home. But the thesis is very much anti-humanoid. So they're actually building, maybe I've talked about this company Sincere before. They're building robots that are shaped like household objects, like lamps, like things you would have in the first product is a lamp, which can actually fold your laundry. So when you're in the house, it looks like a lamp. When you're out of the house, it unfolds and it comes and it folds your laundry and then it goes back to being a lamp again. Very cool.
It's a
That's a little bit
transformer.
scary, doesn't it?
Oh,
Yeah.
well, actually,
It's going back to our childhoods.
They did an amazing YouTube launch on YouTube. The early orders they got on it were insane. It's a cool thesis, and if you can ideally, you're blending very high quality design with obviously best in class robotics, but it's a different take on, are we ready to have humanoids in the home?
I think that's where we'll end up. That sounds more plausible to me than a generalist. Mads, what were you going to go?
Yeah, the core notion of Elon's strategy and vision around it is he sort of says, look, the world is already designed for humans because cars are designed for us and all tools are designed for humans. So make a humanoid robot and it will fit straight into the world as we know it. And that's plausible. But if it's not quite getting there, we know that in most of these situations, 98% of the weight just won't be enough because, as you say, Dan, it falls on top of the granny or the dog or something else, and it's a catastrophe. And so if that means that humanoids aren't a thing just yet, then that means that there will be a lot more robots and they'll have other form factors. Maybe it'll be disguised transformers, Lomax, as per your idea. Or maybe it'll just be purpose-built robots that can do stuff in manufacturing, in construction, in agri, in all the other fields, which actually I'm much more bullish on right now. So it was just that segue. And that's my thinking when I look at Tesla. On the other hand, I think robotaxis are extremely interesting. And I think that will be huge. I completely agree with you, Lomax.
Interesting metric to track though, Lomax. Interesting that they're tracking, to start with, miles driven. It just feels like a metric you would choose to suit the narrative of an early tech. Surely more how many devices on the road is going to be where we're going to end up, and then how many miles and other metrics, I'm sure. Cue early PR metrics. Mads, what else? I mean, maybe more on the alphabet piece. Anything on there for you?
Look, I think you pointed out it's the first negative free cash flow quarter since 2004, since the IPO. And you talked about debt. It's not just debt. They've been issuing shares.
It's amazing, though. It is amazing.
It's just crazy. Now Sundar, he is not a dummy. I mean, if there's anybody who is sort of a master of the universe and a super strategist, it's him. And it's clear that the cloud business is growing at a nuts rate. I mean, this is $1 billion business growing at 82% year on year. So it's absolutely off the charts. But when you look at it in context, they're going to be spending more than $200 billion on capex this year. Cloud revenue, full cloud revenue, is just about $100 billion, and only a fraction of that is AI. So it's clear that there's just a little bit of imbalance yet. And I think, look, I think it's too early to call what's going on. I think people are getting very excited over this. It's a mature business, like Microsoft. It's a mature business. People are expecting to see sound, prudent, grown-up, fiscal responsibility. And so the share will go a little bit up and down as the market tries to work out, can the growth be sustained? Will the market eventually clear? And I think that's where we are right now.
Anything, I mean, I also want to
Intel.
kind of look. Yeah.
Intel had a great quarter, 25% up, strongest growth in 15 years. And it was across the board, really, really solid results. They're shipping some of the new
from the
AI.
old guard.
Well, so the two components to it. They're shipping some of the new AI semi stuff. That's great. They've got contracts in place, so they're coming back there. But also, don't forget, a massive part of the growth in AI right now is in reasoning models, coding models. What do? Well, of course, they do inference, but they also do tool calls. Okay, so when my reasoning modeling goes and does a web search, or calls the command line to call some kind of compile something, or does anything that's not inference, that's not a GPU operation. It's a CPU operation. Okay, and then you're straight back to, well, I need CPUs. Now, of course, ARM has been supplying CPU firepower to NVIDIA, but there's a lot of other stuff going on in the industry. Everybody's been focusing on GPUs for inference and for training, but CPUs are not dead yet. We need them, and we need a lot of them for reasoning models. And of course, that's helping Intel.
Well, let me just give you a quick précis of the things that caught my eye this week, and then we can bounce around wherever it feels appropriate. So we saw Kimi K3 was released last week. Open Weights, I think, released next week, I think the 27th. And it's been purported to be the new Fable. We'll talk about that in a minute. OpenAI attacking Hugging Face. Yet another circular deal. AMD investing $5 billion in Anthropic. So looking at the Kimi K3, the moonshot new open weight model, just very quickly, 2.7 trillion parameters, $15 a million versus $50 for Fable. Is it Fable level? I saw the UK and US AI governance departments. I forgot what they're called. It's CAISC. Yeah, there's one in the UK, one in the US. They both come out and basically said it's about 50% kind of hit rate at Fable level, but we'll see as the weights are released, and we'll see a bit more, I think. Hugging Face was hacked. OpenAI's models did the hacking and sat inside Hugging Face undetected for hours. Now, I did look back, and because this kind of triggered something, we did call this in episode 87 back in April. We said we would see an agentic AI attributed breach within 12 months. It's been, 4? Also, I saw this week new data from Peter McCrory, who is Anthropic's head of economics, stating that AI hasn't moved unemployment yet. Obviously, there's a lot of context and nuance in that, but he's looking at the broadest data set in the US, as they're the highest adopters, so it's probably the best canary anyway. Still nothing meaningful in the numbers, he says. Obviously, a vested interest there. However, it's not AI won't take your job. It's more a case of AI hasn't yet taken your job because it still needs you to steer and catch mistakes. Mads,
the wolf is coming. The wolf is coming.
I think there is an interesting non-future based aspect to his writing, and obviously we'll see how it pans out. Elon reckons we've got 5 years until AI won't need us. Over here, obviously, we have a little bit more legal regulatory sticking mud, quicksand, so we're going to be naturally slower to adopt. So we can always look west and see what's happening there and then maybe catch it in time. Maybe that's a little bit too happy ears. I'll see. Also, interestingly, I saw this week that Trump is trying to ban or threatening to ban Chinese open source models. I think it's turning more into just creating shed loads of friction rather than a ban because it feels a bit nuts. Axios ran the story on Monday. The White House immediately denied it. Sounds bonkers. It feels like it would be a spectacular own goal on the US economy should there be anything more stringent. But Mads, how do you think about this, and where would you take this one?
So many aspects, Dan. Where would you like to start?
Well, the thing that really kind of poked me in the eye was any version of a ban on open source made me think, well, if there's anything that looks like that, surely that gives the rest of the world and Europe a leg up.
I think banning open source is really hard. I mean, that's banning freedom of speech.
And it's out there. It's already out, right?
It's out there. It's out there. So I think you can't do that. What you can do is you can hit the procurement line. You could say, just like, we've had GPL, right? We've had folks that are unfamiliar with GPL and copyleft. So open source, kind of the whole idea is that you have software that has an open source code that people can download the source code and modify it and embed it in their own technology, etc. And when you have open source code, it's distributed under a licensing regime. And there are different licensing regimes. Some of them are very permissive, meaning the open source can be used for whatever you want. Some of them are more stringent. It may be the licensing regime says you can use it for your own private purposes, but if you use it commercially, you have to pay. And still others are saying, if you use this open source code for any commercial purposes, we own you. And that was sort of the idea of GPL and the whole copyleft, not copyright, but copyleft movement that says, look, if people are being mean capitalists and using this free-spirited open source software for nefarious commercial purposes, we'll get them. And that's a problem, of course, for businesses. And so as an industry, we've been all over this and trying to make sure that nobody uses the wrong open source code in their products. Well, could the US government do the same thing? Can they say, if you use a Kimi K3 anywhere in your supply chain, can we then say that means you will not be eligible to sell to the US government, for example? So we're not banning free speech, we're not banning the use of models. You just can't sell to us. We're going to cut off a huge part of the market. And of course, that's complicated because even if you as a business only sell to other private companies, well, they may be selling to government. So government has got a huge reach in that sense. And that is probably the way one would go if one wanted to do this. And could it happen? If you open AI and if you're Anthropic, that is, of course, what you're hoping for, because you're looking at you charging Fable at $50 a million tokens and saying somebody could download some open source off the web, running on their own servers and run inference at a fraction. Interestingly, there's a point here because we're talking about $50 versus $15, I think was the number.
It's not as big as I thought. I thought it was going to be a 10x. It's not as big as I thought.
Well, so that is the cost to run it off Moonshot servers. It'll be cheaper. It'll have a different price in different places. However, a token is not a token, because different models have different reasoning efficiency. Now, it used to be, I asked my model a question, it'll come back, it'll do a single pass and then come back with an answer. But the powerful thing today is the reasoning, where the model reasons with itself and thinks through different problems. And what we have seen is that Fable is actually quite an efficient model at reasoning and can get to answers with fewer tokens than a Kimi K3 can.
Okay.
So a token is not just a token. And so expect lots more interesting evolution here. Now, I think the Chinese will eventually figure this out and become much more efficient because they build for efficiency and they'll keep hammering at it until they work it out. But right now, the gap is not as wide as one would be led to think.
The Kimi K3 weights are being released on the 27th of July, right? So Monday.
Yes. Yeah, Monday. Yeah.
But Mads, we talked about this before, is that the Chinese have been thinking about basically stopping that, right? That stopping the companies from releasing the weights.
It's been discussed.
So if that happens, then you have a problem, right? If you're sitting in Europe.
Potentially. I think in that situation, I think NVIDIA would clean up because, as we spoke about, they've already got their Nemotron, they've already got the open source model. They've been holding back from perfecting it because their customers are all the frontier labs, but they're all rolling their own on silicon today. Google's rolling their own TPUs. Anthropic is using TPUs, right? Everybody is doing their own stuff. So what's holding NVIDIA back from saying, well, great, we will just up our efforts on the Nemotron and release an awesome open source model. What is the primary complement to a GPU?
Yeah.
It's the model. Right? If we all have free models, what do we all need to run them? GPUs. Yeah. So I think this is what I could see happening if the Chinese pull back. So I actually don't think there's a whole lot for them to win here, but we'll see.
Any notes on the Hugging Face hack, Mads?
I think it's super interesting.
Do you think it's PR?
No. It's hard to say where the line goes. I do think it was great, Dan, as you said on episode 87, you said this is going to happen. It happened more quickly than some people had thought. And what was interesting in all of this is Hugging Face. What do they do when you're hacked? Well, you turn to your trusted AI to try and work out what's going on. And what is your trusted AI? Well, that's the good one you have from Anthropic, right? But that's guardrails. So as they were being hacked, as they turned to Fable to try and work out what's going on and defend themselves, oops. The classifier came out and said, well, you're using it for some cyber defense stuff. You're not authorized to do that. So they had to go to the Chinese models to defend themselves from the OpenAI attack.
Oh my goodness, how the web weaves. Oh my goodness. And also, who knows what's going on behind the scenes as well. Anything on the circular financing, the AMD Anthropic deal, anything in there that caught your eye that was worth talking about?
It doesn't excite me that much. I think, everybody's so excited talking about Lucent and Nortel. I think this is completely different. It's not like they are putting money towards buying kit that isn't being used and sits in a dark, dusty room
And
somewhere.
it's been around for years. I mean, this kind of the auto industry has been at this for years as well. It's not like a novel way of doing business.
It doesn't excite me that much. I think we should watch out for, does the revenue keep growing? Can the firms keep monetizing? And if they can, this is fine. If they can't, that's an issue. But then the issue is not the vendor financing. The issue is the monetization at the front end.
Yeah. So everyone's going to keep dancing while the music is playing, baby. Anything else in there? I mean, the McCrory piece, it feels like a nothing burger, but is there anything from either of you on the McCrory AI jobs thing?
Dario, who is McCrory's boss, has been saying that the AI is coming for your job.
Yeah, he's been saying the opposite for years, hasn't he?
Yeah, and now McCrory's like, well, the numbers are actually supporting that. And I think that's what we're seeing in general. So there is a huge amount of scaremongering. And is it plausible that there will be displacement? Absolutely. But we're just not seeing it yet.
No, I think the interesting thing to watch will be the entry level jobs piece. That's the thing that kind of worries me the most personally. Mm-hmm. But it's not sizable enough in the metrics yet. So we'll see how that one pans out. Right, the big meat and potatoes, gentlemen. I want to know, if you woke up tomorrow as the UK's 8th Prime Minister in 10 years, what would you do? So within the context of investing, startups, innovation, VC, blah, 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 all the good stuff that we know and do at our place in the world. So just to containerize it a bit before we kind of go off into random directions, what would you do? I've got my top 5, but I want to hear from you guys. But first off, I want to just have a quick review on what Burnham has done so far and a quick look at who John Healey is, who is the new UK Chancellor. So far, we've seen from Andy Burnham, he's scrapped digital ID, he's removed VAT on domestic and electricity bills, which I think people may not know that electricity bills is split into 3. And on the domestic side, we're not horrific. But on the industrial side, the cost of industrial electricity is, I think, the highest possibly in all developed economies. He's also reinstated a £2 bus fee cap. Lovely man. Business rates cuts for pubs and clubs. Pledged 340 million to end rough sleeping. Killed the Department of Science, Innovation and Technology and installed a new minister for AI, Kanishka Narayan. I feel like I've missed something. What else have I missed that he's done? All these crowd pleaser policy launches. What have I missed, guys? Anything?
I mean, I hope you're not counting killing decent as a crowd pleaser, because that seems
no. I'm sorry. I'll retract. Although, to be fair, every new government tweaks acronyms or changes. Some of the actual services stay the same. They just get absorbed elsewhere, or an acronym gets changed. So I'm not convinced this is such a big deal. And maybe one of you will have some notes on this, but yeah, I mean, I'm not putting that in the crowd pleaser pot. No.
Okay. I mean, so what they've done is they've asked the one Department of Technology and AI we had, they put the remit under the Department of Business and then back into kind of central government, into the cabinet office, and sort of split it up and atomized it. And I think Kanishka, was already AI minister. Now he's going to be allowed to attend the cabinet meetings, but not as a cabinet minister. So you can sort of sit in the corner and maybe be asked questions if others need to know what AI is and how it works. It feels like a step backwards to me, I must say. I thought DC was a pretty good idea. Yeah.
Before we get into some more of the detail on this, I just want to have a quick check-in on who John Healey is, our new Chancellor. So it wasn't Mahmood or Miliband, as many people had suggested. So who is he? Well, he's politically safe. He's a steady hand. He's the ex-defense minister, who I'm sure many will remember for resigning under the Starmer government for not being allocated enough capital to do what he needed as defense minister. Born in Wakefield, a very soft-spoken gentleman. He's 66, married for 33 years. I couldn't find much on his views on the economy, but I saw a lot of reports saying, he's unknown, but actually he was the PPS to Chancellor Gordon Brown, his private secretary from 1999 to 2001, then economic secretary to the Treasury 2002 to 5, then financial secretary to the Treasury 2005 to 7. So he's not a nothing burger here. So he's involved in fiscal policy, regulation, economic planning under both Blair and Brown. Is a defense hawk? Will he be a fiscal one? What's going to happen with gilts? What will his first moves be? I don't know where we start that. Maybe Mads, you can set a bit more of a scene, and then we can get into some of the good stuff.
Well, I think the problem the government is inheriting is a big problem, is we are all relatively poor. We're all £10,000 a year poorer than we would have been if the economy had continued to grow the way it did from the late 70s to 2008. Because if we continue to grow on that trend, GDP per head would be 10K higher than it is today. And that's massive. You know, you think about £10,000 for the average family, but it's huge. And that's genuinely agreed, you know, across the board, right? That's both the TUC and economists on the right. So everybody's looking at this issue, and that impacts living standard, impacts tax take, it impacts everything. If you compare the UK to the US, you've got kind of Mississippi, one of the poorest, least functioning states of the US, and our output per head is just above Mississippi. And if you take out London, it's below. So the UK is now poorer than the worst performing American state. Make of that what you will. The typical Poland is going to match UK GDP per head within a decade on current trend. That's really not good. And you look at some of the implications, you look at what it's done to debt. I think, Lomax, you've been digging in a little bit into that. It's a debt interest today. It's 110 billion pounds. It's their third biggest budget line. It's more than all of education we spent just servicing debt. Welfare is killing us. 330 billion last year, up above 400 billion by 2031. And the issue is that today, welfare, the spend we have on welfare, exceed the entire income tax take.
It's mental.
Yeah.
It's absolutely nuts.
It is mental, right? And so it is clear that this is unsustainable. And what I fear is that the government will put their head in the sand and say, well, we can't possibly take money from everybody. They're poor, they're weak, we have to support them. But the challenge we have is unless we make some changes, we will all become a whole lot poorer. And the current trajectory is just not good. Now, how big is the hole we have to plug? Well, sometimes people talk about the 34 billion pound current deficit that happens every year. That doesn't sound like a too frightening number given the size of our GDP. But there's also an 82 billion pound investment line. And it is sometimes said that you can exclude investments because they'll go towards funding stuff that'll be good and yield good things in the future. But it challenges some of the stuff you count as investments are things like HS2 that will never yield a positive NPV on the current track. There's a ton of stuff we're stuffing in there. We're buying new stuff for the armed forces. We call that investment. Guys, it's expenditure, right? It is important. We should do it. But it's not going to yield a positive ROI. It is not what you would classify as an investment for any right-thinking investor.
GDP is currently what? So debt to GDP is currently 95%. By, I think, 2060, it's forecast to be 300% at the current rate of deficit and investments that you just alluded to, Mads. It's that is crazy.
It is. They're crazy numbers. And let's unpack some of the ways we're thinking about investment and why we are where we are. If you look at HS2, because this is sort of this NPV, I used NPV, net present value. It's the, if any of you listeners are not sort of, investors, investment professionals, when you make an investment, you have to put some money up front. Let's say we invest $100 million in something, and then you're going to get some money back over time from the revenue, the profit you're going to get from that asset. And what you try and work out is, of course, if I'm investing 100 million today and we're going to get 100 million back in 10 years, well, today's money is worth more than the money will be in 10 years. So that's a bad investment. And what I'm trying to work out is the money that I'm getting in the future, if I discount that, if I value that at today's value, is that going to be worth more than the investment I'm making? And if an investment is worth more than what I'm putting in, then it's a good investment. So if I'm investing 100 million today, but the thing is worth 110 million in today's money, that's a good thing, and we should do it. We should just keep doing those sorts of things. Now, the challenge we have is HS2 today, it looks like it could exceed 600 million pounds per mile of track.
Is that saving the newts? What is that?
It is the newts. It's the bats, is the fish, and fish. I mean, it's all that stuff. So people are saying, oh, it's just because we wanted to make it really fast, and people were getting too ambitious. Guys, come on. In Spain, they built a track that was slightly slower, not at 600 million per mile, but at 25 million per mile. Okay, France managed 46 million per mile. Japan, 50 million per mile. And that is even with half of the new expansion they did is tunneled. Okay, so lots of expensive to be. There are mountains in the UK. We don't have that excuse. Like you run out of excuses. And why is this happening? It's because of all the rules, all the regulations, all the things we are putting in place to make it difficult to do stuff. Where does it come from? It's this notion of the risk-free society we've been trying to create over the last 30 years. Brick by brick, we have been putting in place barriers to business and to entrepreneurship. And it's all for reasonable reasons. In 1991, Robert Maxwell, he died at sea. And it was found that 450 million pounds were missing from the Mirror pension scheme. So in fact, he had been robbing his pension members. That was a bad thing. So of course we acted. We put in place the Pension Act, minimum funding, FRS 17. Lots of things were done to then protect pension savers, including developing new ways to look at how much money should go into pensions and how they should be valued. One of the key things there is if I'm running a pension fund and I'm investing, I have to value that as if it was invested in gilts. Even if I buy tech stocks, even if I invest in venture capital, I still have to project the value of that in the future as if it was invested in gilts. So lo and behold, everybody invests in gilts. People don't invest in equities and venture capital and the stuff that could actually yield good returns. That's really bad for us. That's why pension funds used to have more than 50% in equities in the UK, and now it's 4%, right? You've got Grenfell, 2017. It was terrible. 72 people died. So of course we acted. We put in place the Safety Act, the gateway approvals, the second staircases. Now the bill has arrived now. In 2015 in London, 33 new homes were built. Last year, 5,000. Okay? An 84% collapse because we made it so difficult, almost impossible to build, that nothing gets done. Another example, 2008, the banks nearly took down the economy. So of course we acted. Core equity was increased from 2% to 7%. Retail was ring-fenced. The bill has come back. SME lending to small and medium businesses, has decreased from 10% of GDP to 6 to 7%. All right, so less money for the young growth companies, the small companies that need to create jobs and grow. And on and on and on. Brick by brick, we have been building this risk-free society, and this is what's killing growth. And unless we reverse it, we can't fix these issues we have around debt and our public finances.
You are on one, my man. I'm seeing you in my mind's eye in public office, standing next to Andy, giving it like it needs to be given. Good. Lovely points. Let's talk about what we would do. So Lomax, I've got top 5 things I would do if I was, I guess, Chancellor, not necessarily Andy Burnham, but what would you do, Lomax?
You need to move away from risk-free society, as Mad said, which cuts across your Andy Burnham's happy home in every happy heart in every postcode, right? We just simply can't underwrite everything at the state level. So the state needs to shrink. We also need to maintain fiscal credibility at the same time, right? So we can't necessarily go straight into a, cut all taxes, kind of end up in a kind of potential Liz Truss territory. So there's that trade-off. I would, though, in no particular order, the welfare state needs to be addressed, right? We need to bring the cost down. We need to encourage more investment into technology in our society, particularly in like opening up the ability for pension capital to flow in, to growth capital. We need to make an attractive place for foreign people to invest. So there does need to be a look at things like corporation tax, some tax incentives for people who are actually investing significant capital. Clearly, we need to have a cutting of the red tape, a deregulation drive. I mean, look at this data center build out, right? We're trapped by 2 things. We're trapped by the energy problem. So we need to bring that down. We need to deregulate nuclear, for example, and make it easier and quicker and cheaper to build nuclear plants and to cheapen electricity prices, particularly industrial ones. At the same time, we need to make it easier to build data centers. So that also is a deregulation play. Look at what happened since the Americans came over last year and with Donald Trump, and we had all these big announcements. Basically, all of that's been unwound because everyone found it's too difficult to do that in the UK. The Stargate OpenAI project in the UK got cancelled. So it's a combination of, and the problem is, it's very easy for me to sit here and be like, well, we should run austerity, and we should cut welfare, and at the same time we should increase spending in these critical areas. It's very easy to do that theoretically, but if this is a theoretical exercise, so sure, let's go for it.
Yeah, no, it's tough. I think the one thing I would do above all else is to bring back the feeling of being proud to be British and energetically instilling, I don't know, at schools, through national service, through clubs, through multitude of ways, just feeling a sense of national pride. I think there's an energy piece that we're missing in the UK where we don't feel together. We don't feel like we need to get up and get out and do and build and be innovative and learn. I'm being a bit unfair here to a degree, but I think I've always felt a sense of a lacking sense of pride.
Yeah, and I wonder whether that's cart before horse. Okay, so I actually think you can find sort of roughly 30 billion that you need to balance the current account on the fiscal position. That immediately will start to bring interest rates down. That will stimulate lending. It will stimulate house building. You start to unwind some of the regulatory issues we've created. That will further boost growth. The economy starts to move again. I think that leads to all the things you're talking about. I think we've got plenty to be proud of culturally in the UK. I was proud when you saw England play on Saturday, right? What a great match, what a great run they had at this World Cup.
Yeah, we got to the semis. Yeah, we should be proud of that. I just don't think that was. Don't think we were.
You don't think so?
I don't. I think we are lacking a confidence, an energy, a drive, an ambition. I think we are stuck in a very southeast bubble. I've not for a while now, but I've spent a lot of time in the Midlands, up north, in the northeast especially, and it's just a different country. And it's hard work. It's hard trodden. There's a difficulty that we just don't see down in London and the southeast. And I think I understand why Burnham is now doing the political piece and not working from London No.10, but working from the northern No.10 and But I think if energetically we start from that, I'm going to get up and do. I feel confident. I feel positive. Okay, I feel energized, and we're going to go. I think that's to me that's the starting point.
If you look at it a bit like a startup or any business, you have this like trade-off or two things you need to get right. You need to get the narrative right, and then you need to get the fundamentals right. And by the fundamentals, Mads is totally right. You need the everything really does flow from the growth rate, from the economy, right? So everyone clearly will be feeling great about that. If they're making money, they're feeling richer. Like if there's a lot of opportunity for them.
But this is my point.
However,
what starts that?
At the same time, you need narrative, right? Like a startup at pre-seed or seed stage, right? Or you need.
And when you don't have the data, you need the narrative, like you say.
We know Starmer failed on narrative, right? And so actually,
yes.
Tony Blair was amazing at narrative, and he wasn't so bad at fundamentals either. Fundamentals, of course, is a little bit out of your hands as a politician, right? Because the UK is so it's so like look at what happened to Gordon Brown. Suddenly the GFC happens on your watch. You can argue it's his fault, but also probably the fault of what happened a lot in the US, right? So there is an element on the fundamental side that's a bit out of your control, but the narrative is way more in your control. But I do think now Mads is basically right. Like for this all to work, like you need the economy to be people to be feeling richer and for people to feel like there's opportunity, right? But while you don't have that, or in the gap before you start getting it, you need the narrative, which is what we have not.
You'd be such a lovely moderator, Lomax. You should come and join our meetings. You'd be such a lovely moderator.
Well, if you think about the narrative, also is like if you've got 7. I was looking at a table of, in the UK, we often laughed at the changes in prime ministers in European countries. Now the UK is like had the probably highest or second highest turnover apart from Bulgaria or Romania in the last 10 years. So, that is a lack of narrative. You had Liz Truss going, let's go this way. And then, she did the lettuce thing. And then you have, you know what I mean? Like, no one's had enough time. And then the one dude who came in with a 320 whatever majority seats he had, Starmer, who had the opportunity to bring in some narrative, failed because he didn't have it.
Yeah, not his strong suit.
He started to put some reasonable fundamentals in place. But the sad thing is now, even like for us in technology and AI, actually in the AI opportunities plan, like there's actually some quite good things in there. But now Burnham's probably going to just rip them up or ignore them.
Lots of tears, no riz, as they say. I'm going to quickly run through my 5 and then Mads, see if anything that you would add or poke in the eye. So I would rule out a wealth tax, day 1. Declare war on industrial energy costs. Fix planning, get reform with teeth, restructure taxes rather than raise them, and force pension capital into UK assets. I would force it personally. What would you do, Mads, or what would you challenge out of what we've spoken about so far?
Yeah, not surprisingly agree with you on most of these bits. I wouldn't force capital. I think you can't confiscate people's pension savings and tell them what to do. You can put incentives in place. I think that's far more powerful.
Yeah, you've always been big on that. Yeah.
There are massive incentives around pension savings today, right? It's costing us more than £50 billion a year. We're talking about fiscal, gaps. I mean, that is a huge amount of money we're spending.
Yeah, you nailed it in one. Yeah.
Direct some of that towards what you invest in. Say, okay, great. You want to save in your pension to invest in Max 7 stocks. They're probably going to do fine. They probably don't need a subsidy. Fine. Maybe you get less of a tax incentive there. You're going to invest in UK assets, companies, startups, whatever. Great. You're going to get the full tilt. I think that's pretty simple, and I think that in itself could solve a huge thing. Then there's also the regulatory piece, right? How are pension funds measured? What constitutes a good fiduciary, a good administrator, a good investor in a pension fund? Is it somebody who just minimizes fees and minimizes volatility, or is it somebody who maximizes long-term returns? But clearly, it must be the latter. So there's some of those things that have to change.
Like, what the hell is Burnham going to do vis-a-vis like AI and technology? That's the thing that is the kind of thing that we care about in this podcast.
He gets it. He's not anti.
I don't know,
all the reports that I've read, he's not anti.
I just worry, as I've mentioned here before, I do think AI is a bit of a vote loser for many.
But he's a political maneuverer. I'm sure he is cognizant of the reality and will know how to politically maneuver.
Well, yeah, and if he, he could do the kind of cheap things that keep people happy, like ending rough sleeping costs 40 million.
Look over here, look over here, look over here. Whoosh, over there. Yes.
Well, I mean, he obviously I think he opened up licensing in the North Sea, right? So he's clearly doing things that.
Oh, that was one of the things that I missed. Oh God, that was one of the most important things. Don't. Yes, he's pledged to open up gas and oil in the North Sea. Right, let's move on. We are running out of time, and I'm conscious that we might be starting to sound like grumpy middle-aged men. So let's move on. Mads, deal of the week, go.
So 2 deals of the week. The last week we were talking about the Palantir diaspora. This week it's Act 2. We were discussing Valarian last week, which is sort of the anti-Palantir. Palantir, NEA's first European defense check, the founder, 12 years at Palantir. This week, it's the same story running again twice more. The alumni are fanning out. The American capital keeps writing the checks. So we have first up Cusp AI, which is a super interesting company that specializes in looking at using AI to develop new materials. The whole question is, how do we find the new materials we need in industry? And so the kind of the thing they're claiming is they're evaluating 300 trillion candidate structures with the new AI model, and that's led them to raising a $450 million Series B at $2.6 billion, led by Kleiner Perkins and NEA, so NEA that we remember from last round, co-founded by Chad Edwards, who was from Quantinuum, and Max Welling, who was the co-inventor of the variational autoencoder, which is the maths that sits underneath generative AI.
So the UK government was in Cusp, wasn't it?
They're in the round. Yep, they're in the round. Okay. It's led by Americans, but it's very much in there. So I think that's interesting. The other one is so cool. Arrakis, for all Dune fans, know that that's the place where spice flows. The name is really in the pitch. In Dune, the spice is the kind of the most valuable thing. In our world, it's data. What they're about is to swap the spice for the industrial data. So it's procurement data, supply chain, project delivery, kind of all that stuff that's embedded in large enterprise. It's the 30 million Series A led by Blossom. Well done, Blossom Capital. Yeah, they're building what seems like a really cool company. So that would call that out.
Lomaxis, do you have a deal of the week, sir?
Well, I mean, other than Delivery Hero, the Delivery Hero's story is ending with Uber actually acquiring it. Delivery Hero is a listed company, scaled to 50 markets, predominantly.
Is it done?
Europe. I think has probably hit a ceiling.
Ah, fair enough. That was that's they're German, right? So that's
14 billion euros. Yeah.
Let's see what comes recycling because. Right, gents, we have run way over. Thank you so much for your time. Lovely listeners and watchers. We will catch you next week.
Bye-bye.
Yeah, the next one.